Hey, Small Axe community. Welcome back to another episode of the show. Now, today I am extremely excited because I got a good friend of mine here with me. And it's been a while since we caught up, and his perspective and his expertise and his experience is much respected by me. So let's not waste any more time and welcome my friend Greg Dickerson to the show.
Hey, Nico, thanks for having me.
Yeah, I am excited to talk to you today. I tend to lean on giants when it comes down to times like this, when there is some uncertainty in the markets, when there is a looming recession, et cetera. So I want to get your perspective on what is happening in the world. But first, if you wouldn't mind sharing a little bit of background of yourself and how you got to where you are today, that would be great.
Yeah. I'm a serial entrepreneur, real estate investor, and developer, and coach and mentor to people all around the world. And I started my career, my entrepreneurial journey after I got out of the Navy. I went in the Navy right out of high school, did not go to college, started out with absolutely nothing in 1997 and started 12 different companies. One of my largest companies, I turned into a $30 million business in 7 years, built and exited 12 other companies along the way. So I was hot and heavy in real estate and entrepreneurship back in 2009 when the bottom fell out, and exited all my companies around 04, 05, right before the crash. Had a lot of real estate in 08, 09, and I've just been investing and developing ever since. So it's almost 30 years now that I've been an entrepreneur, and like I said, I started right out, got out of the Navy right after high school, did 4 years, and started with absolutely nothing from scratch, built everything from scratch the hard way, and learned a lot of lessons along the way.
Yeah, and this is another reason why I got you on the show, because I love hearing from your experience things that you've dealt with and just your perspective on what is happening in the world, because you truly do have a really in-depth knowledge of what is going on. So now, obviously, nobody's got a crystal ball, right? But let's talk a little bit about where you see the market today and the conditions today.
Yeah, so the markets in general, obviously, we have recession concerns. There's a lot of headwinds to the financial markets. The Fed is on a path to tighten financial conditions, trying to get inflation under control. Very unique environment. We've never seen anything like this in the history of this country or world in terms of, let's just take the United States in terms of where the employment situation is. The job market's very tight. Not enough workers out there. That's keeping pressure on prices. We had record low interest rates. We've never seen that in the history of any bull market that we've ever had. I mean, you got to remember the dot-com bubble. I mean, interest rates were not where they were the last 10 years, and more particularly the last 2 years. So this run up that we've seen has just been a super bubble because of the artificial stimulus pumped into the economy from the Fed, Treasury, low interest rates, speculation, and just the exuberance that we've seen in the markets the last couple of years. And it's been financial markets, real estate, all sectors of real estate, automobiles. I mean, it's just been incredible. And the pandemic obviously compounded a lot of different things. So, where we're at right now, there's a lot of risk out there to the markets, all markets, as we know, with interest rates where they're at. The Fed has not gotten interest or inflation under control. The economy is still humming along pretty strong, pretty hot. The job market is still really strong. So until those things are brought under control, we're going to continue to see the Fed continue to want to tighten financial conditions, meaning keeping rates higher for longer and wanting demand destruction. The way they do that is by making people feel less wealthy. Your 401k, your portfolios get drawn down, your value of your real estate goes down, your liquid reserves go down. I mean, that's what the Fed wants. They want a recession. They don't want a deep recession. They don't want a 2008, 2009, or even a 1929 situation, but they do want a recession, a slowing of the economy in order to bring prices back into check, level out the job market a little bit, and just bring everything back down to earth a little bit. So that's kind of where we are, and it went from a soft landing to a potential hard landing, and now the plane's blown up in the sky is kind of where we're at.
Oh man. Okay, so let's go a little bit more into that. So the Fed is trying to pull some strings to kind of level the playing field and level everything out. And obviously I'm assuming you think there's good intention behind it, right? And do you think with what is happening with the way the interest rates they're continuing to rise and they're continuing to push interest rates, including November, it's going to happen when this thing is going to air, that is going to be effective?
Well, it's going to take time. It will be effective eventually because obviously, as rates go up, the cost of capital goes up, the cost of everything goes up. So that destroys demand. The biggest challenge they have on their hands right now So that's effective for monetary policy. That's effective from that standpoint of tightening financial conditions that reduces the speculation that helps asset bubbles grow. The one thing they can't and haven't affected yet is the labor market, the job market. That is just, really compounded over the last 2 years from the pandemic with the Great Resignation, all the stimulus checks that were pumped into the economy, early retirements, people not wanting to go back to work, finding other means to make a living. So that's the area that they have not been able to make a real dent in yet. And surprisingly enough, the most recent GDP just came out, and the economy actually grew a little bit. So the Fed is getting ready to meet again, and it's going to be interesting to hear commentary, but I think we're going to hear a reiteration of what they've been saying since Jackson Hole, which is rates are going to be higher for longer. I don't know what the markets, were interpreting. One of the Fed officials came out and kind of hinted at slowing, which is the new pivot. Everybody's looking for a Fed pivot. So we saw a Fed pivot 0809 when the markets were tanking. The Fed jumped in, propped the markets up. Took 10 years for the markets to get back. Real estate, financial markets, everything. Real estate took about 13 years. Financial markets took about 10, 12 years to get back to even. In 2017, 2018, the Fed tried to do QT, and the markets threw a little bit of a fit. So they jumped back in and pivoted, meaning they reduced interest rates and started, pumping liquidity in the economy. So we had an instant V-shaped recovery. And then we saw the same thing in the pandemic. They can't do that this time. So anytime any of the Fed officials now, instead of the pivot, which is a stopping of QT and lowering interest rates, then it went to pausing. Now the pivot is the Fed slowing down rate hike, which they've already said they're going to do. So it's going to be interesting just to see how all this plays out, how long it really takes. And it takes a while for the rate hikes to affect the economy, especially in real estate, because real estate's a longer term prospect. Sellers are stubborn, prices are sticky in real estate. So it takes a while for sellers to become more rational and realistic in terms of the values. Even in 2008, 9, I mean, it was a couple of years for a lot of sellers before they realized where values really were. Everybody remembers where we were. They don't understand where you're at based on interest rates. So it takes a little while for that to adjust. They've got a lot of work ahead of them.
Yeah, absolutely. And thank you for sharing, and thank you for all your knowledge, Greg. Let's talk a little bit more before we move on about the job market. What do you think is the objective here with the Fed? What are they trying to accomplish? Get more people in the workforce?
No. They're trying to bring the balance back into check. So there's twice as many jobs as there are people. So they're trying to destroy the jobs. They're trying to get rid of the jobs available so that market, comes back into balance, because that's what's keeping the sticky inflation out there, because we haven't even seen prices adjust to wage inflation right now. So workers are saying, hey, our salaries haven't adjusted to inflation. We can't continue to work, with inflation where it's at these wages. So employees are pushing for more hikes on wages, salary increases to keep up with inflation. Mm-hmm. And the reason they're able to do that is because there's so many jobs available that if you're not going to pay me more, well, I'm going to go next door and they're going to pay me. So that's kind of what's happening, is that companies are still competing for employees. Now, the tech sector is going to start having some layoffs, but where the real rubber meets the road on Main Street in the economy for inflation are service industry jobs, manufacturing jobs, things like that. Construction industry, there still aren't enough people in any of those jobs. So some of the tech sector employees might, customer service level, things like that, they might, trade down into some of these other jobs if they have to. So I don't think tech layoffs are going to make a huge dent overall. So that's the most difficult area for the Fed to affect, is to, reduce demand for jobs. And the only way to do that is to reduce demand from the consumer. We're a consumption-based economy. We spend. And the consumer has been stubborn through all of this interest rate hikes and inflationary times. I mean, people are still spending because they don't think inflation is going to be around, because of that whole transitory narrative. So people are thinking inflation is going to, it's going to be temporary. It's going to come back down. You have the holidays coming up. You have the post-pandemic cabin fever, where people are getting out, traveling, spending money because they've been locked up. They were able to store up and save money because they didn't go out to movies all the time during the pandemic. They didn't go out to eat a lot. They didn't do all of the things that they would normally do. So there's a lot of that backlog working its way through the economy, which is keeping prices higher. So I think after the holidays going into Q1 next year, I think that's when most of the experts and analysts are expecting a pullback in the consumer, because, credit's going to catch up. Balances are rising where consumers paid some of the credit down with the stimulus, things like that. They saved up some money during the pandemic. Those savings are going down, as the banks reported. Some of them are saying savings are still pretty strong, but some banks are saying that the consumer savings are going down, and then credit balances are going up. So we're going to see that kind of hit home, I think, after the holidays going into Q1 next year.
Oh, very interesting. Really great stuff, Greg. And I'm sure it also falls on the culture of our country, and the fact that we've been for generations now consumers, right? And this is not it's not an easy thing to kind of, I guess, curtail, right? So very,
Yeah, and
very
it's
interesting.
been a booming economy for, the last 10 years, and it was
Hmm.
booming prior to the 2008-9 bust. So I mean, we've been on a, debt driven, stimulus driven, irrational exuberance in the markets, path for the last, 10 years, where everybody's been conditioned to buy the dip in everything, markets, real estate, whatever it is, just keep going, keep going, keep going, keep racking up debt. The government's going to come in and bail you out if anything cracks, like we saw in 2017, 2018, like we saw in 09, like we saw in the pandemic in,
Hmm.
2020. So everybody's been conditioned to think the Fed's going to bail everybody out. So that's what's keeping everything elevated and keeping the speculation, running high. And the good news here is, these are all headwinds. These are all things that are, forming the correction that we still haven't really seen. We've seen a little bit. We haven't seen a big correction yet. And the good news is when that happens, that's where your real opportunities are created. The real opportunities are created in those drawdowns in the markets, in real estate, where you can come in and make some moves that can be generational.
Absolutely, as long as you're ready to fire with liquid capital, right? Here's
In some
another.
areas, in other areas, all you need is intellectual capital. If you know how to raise capital, if you know how to take advantage, you know how to do things, you don't need money. You need expertise, you need skills, and you need connections.
Mhm.
So those are the things that you need to be building now, so that when the time comes, you can take advantage of the opportunities. If you have capital, great, you can use that. If you have connections, great, you can use that. If you have the knowledge, skills, and abilities and expertise in your niche and in your market and your asset type, it's always about the right strategy at the right time applied to the right vehicle. That perfect storm is coming together here soon. So build now. Now's the time to build yourself, build those things so you can be ready to deploy whatever it is that you have in your arsenal when the time comes.
Beautiful, Greg. So let's talk about this then. What is the strategy for the majority of my listeners are multifamily operators or trying to be multifamily operators? What is the strategy now? They just bought something or they're buying something. Like I guess we're just going to hold through this coming or pending recession. Is that what the thought process is?
Yeah, it depends on. So if somebody just bought and they're just getting into it, you bought at the top. So you bought that multifamily asset at the absolute top. Cap rates have been, compressed to the max. The good news is you've been able to raise rents the last 2 years. The question is, with the headwinds to the economy and the pressure that the consumer is going to be under, are you going to be able to continue to raise rent? And you have to expect rates to continue to go up for a while before they come back down. So you have to mitigate those things. And yeah, you have to kind of hold through that and understand that you may not make a profit. You may actually lose value in that asset over the near term, but in the long term, it should work out. But you got to be very sensitive to the market you're in and what's going on, because rents are contracting in some markets. Other markets are still going up. Interest rates obviously have gone up, so that's changing a lot of fundamentals in the space. Credit, controls and requirements for debt are becoming more restrictive, more expensive, more exclusive. They're looking harder at the asset, the sponsor, and the market when it comes to putting debt on the asset. The good news is, from an equity investor standpoint, they're not going to have a lot of other good alternatives. They have bonds now. That's the biggest problem out there for risk assets, is that you can put money in bonds and get a
Hmm.
4.5% yield, right?
Hmm.
So that's kind of the caveat that's out there right now, but that's not good enough for most people. Most people are looking for double digits. So there's not going to be, with markets doing what they're doing, financial markets doing what they're doing. I mean, it could be a while before markets come back to recent highs. So investors are going to be looking for yield, because a lot of people don't want to tie money up for 4%. Even though that's good right now, a lot of people don't think of that as good. So there'll be a lot of people looking to place capital. So it's a good time to be raising capital, getting ready to deploy. And then there'll be some, distressed sales out there for people that have done interest-only bridge debt on assets in the last 2-3 years that are resetting here in the next couple of years.
Hmm.
Those are going to come under pressure, and you'll be able to get some good deals there. Either taking over the debt or the asset, or just outright purchasing it.
Yep. Wonderful, Greg. Let's talk a little bit about having conversations with investors that do see the bond, right, investing in bonds as maybe more ideal for them at this time. And I know a lot of doctors and physicians that are taking that route as well. Is there still some conversation that we can have to have them have faith in other investment vehicles?
Yeah, I mean, so it's in your skills and abilities as a sponsor. You have to show your expertise, show your track record. Um, that's really what it's going to boil down to. I mean, I work with a lot of people that are doing the same thing, locking cash up right now in the safety play, which is, shorter term bonds, 3 months, 6 month, 1 year, just because the yields are so good and they're not going to deploy right now. But really, at the end of the day, it's about you as the sponsor. Are you an expert at your craft? Are you in the right markets with the right assets? Do you have a proven track record? Can you show that your business plan is going to work? Those types of things. And it's just staying in front of people and being in front of people at the right time, because people have different needs at different times. And one day they might be ready to deploy some capital into something that has a little bit more risk associated with it. Another day they may not. You just never know where people are. So you always have to be in front of them, always have the opportunities ready for them. But really the thing is, how do you make them comfortable? By showing them that you're an expert and that there's limited risk in investing with you and your assets and your markets.
Wonderful, Greg. What are you personally working on, and what's your strategic plan throughout the next couple of years?
A lot of different things. I don't talk specifically, because I don't like to lead people, in different directions. But I'm making some moves in the markets. Been doing some stuff with crypto, kind of waiting, for the bottoms to come in. The biggest moves I've made were, the 2009. That's when I entered the markets, financial markets. Never traded stocks or anything until the bottom in 2009. Made more moves in the bottom of 2020, and so I'm waiting for the dust to settle here, to make some bigger moves there, and with crypto this time as well. And then, as far as real estate market goes, fewer bigger deals, waiting for the right opportunities as prices reset and, distressed assets come along. And then I'm working with people all around the world doing all kinds of different things, growing and scaling their businesses, people getting into real estate development, people that are scaling their, real estate, multifamily companies or commercial real estate investment businesses, and work with a lot of doctors, dentists, professional athletes. And then I've got entrepreneurs all around the world that I work with that are doing a lot of different things. So for me at this point in my life, I've created my school of entrepreneurship. So it's giving back, impacting others, and helping other people, do what I did, call their own shots, live their own life, as an entrepreneur. That's been my life since 1997. I've been a self-employed entrepreneur, multiple companies doing different things, and it's a lot of fun, and it's a great position to be in, to be able to do whatever you want, whenever you want, from wherever you want. So that's kind of what I'm helping other people do, especially now. I mean, there's never been a better time in the world than right now to carve your own path.
Excellent, man. I'm familiar with what you do, and also I follow you on social media and your podcast and all that. And also, I noticed that you had, this is a while ago, I don't know if you're still doing it, but a coaching program that was actually on your website. And is that what you're alluding to with your entrepreneurial program?
So it's all there. So I have courses. I have online courses, which are basically like a digital video audio version of a book. If I were to write a book about everything I've done, different things, like I have them on multifamily syndication, real estate development, residential real estate investing, and then entrepreneurship online, how to buy a business, start a business. So they're video courses that, you can download an app. There's a free app so you can watch them, listen to them, whatever. So it's kind of like a video book or an audio book. And they're very good. They're higher level. So what they teach is how to become a real estate investor, real estate developer, how to become a real estate investor, how to become, a syndicator, how to become an entrepreneur. Investor. So they teach you how to become those things. They don't teach you how to swing a hammer and cut a 2x4 or, those types of things, or, how to open a restaurant and make recipes. They teach you the higher level stuff of how to become a leader, delegator, motivator, how to be an investor. If you think about the Rich Dad, Poor Dad, Robert Kiyosaki, employee to self-employed to business owner to investor, takes you through that process. How do you become that investor that owns multiple assets and, lead, delegate, motivate? So those are what the courses are all about. And then, I have a one-on-one coaching program that, is exclusive, that, like I said, I work with people all over the world, mentoring them one-on-one. A lot of people reach out and they say, I've taken a bunch of courses, I've read a bunch of books. I need somebody I can talk to, bounce ideas off of, that can answer questions, that's been where I want to be. that's done what I want to do. And, all of the different things that I've been involved with and I'm involved with now with people all over the world, it's an intellectual capital download, that people tap into. So that's what the one-on-one is all about.
Beautiful, Greg. I love it. Out of all the things you've done, is there anything in particular that stands out that was maybe really exciting for you? And I'm sure that, I have a similar mind to you where I get really excited for something for a few years or so, and I go really deep into it, and then I kind of pivot and I do something else when I feel like I've mastered it. But does anything stand out over the course of your career?
So that's the entrepreneurial curse, right? We love to build. We love to go do, start, build, grow. So for me, it's the thrill of building and growing, whether it's, and for me, it's people first, right? So it's people, operations, profit, people before the company. I love building people. There's nothing that tickles me more than seeing people, reach heights that they never even thought possible. I'll have conversations with people where one idea, one conversation is just a game changer for them in their business. And, I had one guy that saved him $3 million on one phone call on a real estate development project just by telling him to do one little thing. Saved him 3 million bucks. He had no clue. And he was just like, man, and then I've had other people that, that one conversation made them millions of dollars, just one idea. So those types of things is what I love, because everybody's got it, and it happens with everybody I work with. I'll have one conversation with them and they're like, man, that just changed everything. To
Hmm.
me, that's what's exciting, that's what's fun. And then watching them go and build. So like all my companies, I wasn't the one running the day-to-day at a certain point of all my companies. I built them through other people. So I've always been a coach and a mentor, and a leader, delegator, motivator in my companies, and growing people that in turn grew the business for me and through me, and then ultimately through them. So that's what excites me, is just taking people that have untapped potential they can't even see, they don't even know about, and helping them unlock it. Sometimes they don't even realize it's happening. And then once they get there, they look back and they're like, wow, and people that think this path or journey to wherever they want to get is so hard and so complicated. And then once they get there, they're like, wow, man, that wasn't that bad. Now I know I can do all these other things. So to me, that's what's really exciting. And I've got some clients right now that it's just so much fun working with, because they're having these, revelations and, these experiences that are just so much fun. And then, growing and scaling a company and building a company and things like that. I mean, I'm a builder, projects. I mean, that's, as a real estate developer, to me, there's nothing more fun than taking a piece of land, and you bend down, and you grab the dirt and you smell it, you feel it, you can
Mm.
see the project, and you maximize the value of the property by maximizing the density and the use of that property and being creative with it, seeing things that maybe somebody else doesn't see. And how do you maximize the views? How do you maximize the density? Maybe it's, there's something you got to do that's a little bit different than the average, engineers looking at and challenging the assumptions of what you can do with that piece of land and or that building, and things like that. So I mean, those are the things that excite me. You can hear it, just that really gets me going. But at the end of the day, it's building people and then helping them, grow and scale and build their, legacy.
Man, that is awesome. And it must be extremely fulfilling. Me coming from the educational world as just a school teacher, there I see it in kids every day, and it is truly fulfilling. Really, really just warms my heart. Greg, I have a different kind of a question that I just thought of, and I don't know if you have an answer for it, and you don't have to have an answer for it, but I'm going to throw it out there. Now, over the course of the years, you've mentored and coached a lot of people. Have you found any common, I guess, limitations that you've seen in people that are just kind of across the board, something that I see this frequently within people that kind of stops them from being the best them that they could be?
The biggest thing is people just don't know what they don't know. I mean, that's the biggest thing. And as people realize something or more, they realize how much more they don't know. So that's really the biggest thing. Just most people just don't know what they don't know, and they don't know what they're really capable of. So when they start to tap into that and unlock that, that's when it's fun and exciting. And for me, I'm a lifelong learner. I'm voracious when it comes to learning and pouring into myself, developing myself. I've done it my whole life. Like I said, I didn't go to college. I'm self-educated. I'm self-developed. And, I've poured into myself with books and courses and seminars and trainings my entire life. None of my devices have any music on them. It's all business books, audio books, personal, professional development, anything and everything that I can do to better myself so that in turn I can impact others. So that's the biggest thing, is just people just don't know what they don't know, and they're not aware of what they're really capable of, and how far they can really go. And it's, a lot of different things: limiting belief, mindset, and just awareness.
Phenomenal, Greg. Thank you. This I could literally talk to you for hours, and I've listened to a lot of your podcasts, and some of them are short. For those of you guys listening out there, you can just hop on and listen to his podcast as well. And you talk a lot about. I'm going to move on here, but you talk a lot about like routine, and I got a lot of my morning routine and daily routine and just habits from you. Same with the listening to audiobooks. I got that from you years ago when I was listening to you. Same with one. You mentioned one time, just wake up out of bed, make your bed right away, get up, don't give into the feeling that you want to just lay down, get up and get cracking, get going, do a little walk, get some exercise in, and get your day started. And kind of don't take no for an answer with your body. You have a goal and a vision in mind, and you just go for it, and you stick to it. So I really do appreciate you for everything that you have done for the community, for the world, for your mentees. I truly do appreciate you, Greg.
Yeah, and that's a big one, and congratulations on that. I know you've been doing this podcast for 2 years, since we first started. I think it was audio only, and last time I talked to you, and now you've got video and everything. And consistency is the key, and that's the thing. So there's going to be days when you're not going to want to get up. You're not going to want to get out of bed. It's dark, it's cold, whatever. You were out late, whatever it is. But no matter how you feel, this is the key right here. This is the difference between the great and your ability to create greatness in your life and mediocrity. You get up and you go no matter how you feel. You do it, you get it
Mhm.
done. And, whatever your routine is, I recommend starting with exercise in the morning, because it just gets everything going, and then it's done, it's over with, and it's a win. And it just becomes part of your lifestyle and your routine. It's just something you do, just like brushing your teeth or taking a shower. You just do it, even if it's 10 minutes, 20 minutes. And the key to this is, no matter how you feel, get out of bed, make that bed up, get out and hit the street, go to the gym, whatever it is you do. And even if you're like, man, I really don't want to work out, I want to move those weights, whatever. What happens is, once you get in there and you start doing something, then the energy flows and the adrenaline flows, and then you start getting more and more into it. And then it just kind of feeds you. And then you have that win, you have that success, because you did something you didn't feel like doing. There is more satisfaction in doing something you didn't want to do when you don't feel like doing it, than doing something that you wanted to do, and you knock it out of the park. It's it's beating those demons that want to keep you down, is where you get more fulfillment than anything else in your life.
Oh, so well said, Greg. Thank you. All right, let's do it. Let's transition to our final question, and then we'll get the listeners some form of contacting you, because I am sure they're going to want to contact you. Let's imagine it was 100 years from now. You have great grandchildren, and they're all running around as happy as can be, and they wanted to write a book about you and your life. What would you want them to title this book?
Impacting the world, through others, I guess, would be somewhere along that lines, because that's what my life is all about: impacting the world through others. I've been able to impact and give back by helping others reach their potential to be able to impact and give back. So that's kind of how I'm wired. And it may sound silly, but people that know me have known me my whole life. That's just how I'm wired. I just love to help. I love to make an impact. I love to help people make an impact. So I guess, yeah, the title, impacting the world through others, would probably be something like that.
That's beautiful. That's how you can grow exponentially, right? You can only do so much by yourself, but when you set an army in front of you and you train them, that's how to do it, man. I love it. Hey, Greg, let's get the listeners some form of contacting you.
Yeah, gregdickerson.com. Everything's there. My YouTube channel, podcast, all that is there. Go check it out.
Excellent, Greg. Thank you. It's been an honor and a pleasure to talk to you again, and I cannot wait for the next time. Thank you.
Thanks for having me.
Okay, we are done technically. I just have one last thing, if you wouldn't mind reading in the chat. This is the first thing that people hear on the podcast. It's your voice. So, hey, this is Greg. If you want to learn how to, if you want to learn how to use your small axe to build an empire, you should be listening to the Small Axe podcast with my good friend Nico.